Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Tuesday, September 4th, 2018. What we'll do in this video is start out with the broad markets. We'll look at the NASDAQ 100 and SPY, QQQ, SPY, look at the futures real quick, do an update to the follow-up to the post I made this morning. Also wanted to do an update on crude oil, the US dollar, gold, and sugar, which is an active trade on the site, as well as SRS, which is another active trade. Those are some of the things that stand out right now. So really not an all-inclusive or all-encompassing update, but just some of the things that right now I think are at technical levels. So we'll start with the broad markets. We're finally getting something worth noting or reporting, and that is, again, as I covered this morning and throughout the day in the trading room, some of the updates, we finally have some significant or notable, I should say, technical developments. This is a 60-minute chart of the ES, the S&P 500 E-minis. So what you have here is a bearish rising wedge. We had some divergences there at the high. We broke down, back tested, rolled over, and I highlighted this morning we have this support level here. You can see there's quite a few reactions so far. So this is a support shelf, give or take roughly about 28.93, and you can see we punched through there a couple times, but we managed a stick save right at the close. So we traded, on and throughout that level all day. So basically, this is a hold of support. I always talk about, support levels, well-watched levels, trend lines. You want to see the level go with conviction. By conviction, I mean impulsive selling, not just limping down on through there, just like we had a couple punches. So basically, this is a defense of that support level right now. Um, Now, I'll be honest with you. I'm surprised the fact that they regained it just before the close. I figured we'd get a ramp up if that level was regained intraday, which it was. I thought we'd see some buying, shorts get squeezed out that jumped in there, longs become more emboldened, but we didn't. So let's just say today was a draw. Although the markets were down, we're almost flat. I think on the S&P, yeah, we're down 0.17 on the SPY. QQQ is down a little bit more. We'll get to that in a second. So this is to be continued. Now, bigger picture, although we didn't get that second break of support, in other words, this level right here that I was talking about, we have broken down below these wedges and we're still below. So you have the breakdown back test. So I do favor more downside. And I think that minimum target down here, about 28.64, will be hit. That would be from where we closed today or where we're at right now. Remember, the futures trade around the clock. So these have popped a little bit after the close, but you're talking about another 1.2% downside. And again, that is to my minimum target. Now, there could certainly be more. Again, I went over that in more detail in the video today, and in some recent videos, some of the more significant levels to watch out on the daily time frame. And here's what that looked like on SPY. We have the SPY down, actually it was 0.15% or so. You can see we had a divergent high right there. There's your wedge on the SPY. This is a 60-minute chart here. And when we zoom in, you can see that same level. We have a gap in the SPY. Remember, SPY that trades 9:30 to 4 o'clock regular sessions, so you'll see gaps that you don't always see in the futures charts, and gaps are significant levels. They are magnets for support and resistance, the top of or bottom of a gap. So what happened on this SPY chart is you had a breakdown as well, back test as well, just like the ES, but you came down. We had this 289.39-ish support level I mentioned, but we came back down, broke that on a couple 60-minute candles. You can see we zoom in and you can see almost perfectly we tagged the top of that gap, which is a natural support level. And now if that gap is taken out tomorrow, which I suspect it probably will be tomorrow or the next day, the next support would be the bottom of the gap right there, about 287.50 or so. I still favor more downside. First target here is around 285.65, and a second target, hard to say whether we'll get there or not. That's my minimum target. But if we continue lower, I can certainly see the possibility, and I'm leaning that way to as well. Move down here. T2 would be this uptrend line. You can see it better on a 2-hour chart. There it is, comes off the early April lows, and it comes in at around 279.45, which is also very well-defined support. So I really like to see, I like when I see intersecting support levels because twice as many eyes are watching it, so to speak. And, people watching this trend line, they're watching this level or both. That gives you a much higher chance of a reaction off that level if and when the SPY gets there. So if you're looking to buy a dip, that's about, as good as it gets. So if we do pull back there, and to try to quantify it for you, that would be a drop of, from where we're at today. If we got there right away, it'd be about 3.6. If it took a little while to get there, call it about 3.5%. So there's SPY. Let's look at QQQ, then we'll roll into NQ and then move on to the other stuff. QQQ, here's a 60-minute chart. Here's a level I was pointing at here. So you had this uptrend line right here on the 60-minute chart. You had a divergent high. You had a breakdown. And then you had this minor support level where that line is right there. You can see a lot of reactions. These are all 60-minute candles. You can count probably well over a dozen right there, maybe a dozen and a half or so. Broke down, pretty red impulsive candle right there, back tested, back tested. And so the Qs have two support breaks so far. We broke the trend line support, and then we broke this minor uptrend line, and we bounced off this 184.86 level. You can see all the reactions: one, two, three, four, five, about almost half a dozen candles right there. The top of candles defining that level, and that also coincided with the SPY. Remember, I don't trade any one index in a vacuum. Qs are my trading proxy. I prefer to trade the NQE minis or QQQ versus SPY because there's more bang for your buck. It's less diversified, more concentration in the high flying tech stocks. So today's a good example. It was down 0.41% versus the SPY being down about 0.17 or so. So that's that. So here's what we need to watch as of now. Bulls want to see this level taken back, that pretty much today's highs, or where we open. You can see the dotted line from Friday's close right there. Obviously, that would help their case. Bears want to see a rejection there, keep things below there, and then tomorrow take out that 184.86 level. If so, you can see next target's down here about 182.64. What also comes in with that uptrend line support. And for those of you trading QQQ, this is the chart I shared earlier. It's a 2-hour chart, so 120-minute candlesticks. There's that trend line off the early April lows right there, pretty well defined. There's your divergent high right there. I put up some Fibonacci retracement levels that come in right around here. My lower most downside target right now is about 170.86. That would come in with about a 50% fib retracement. You can see the levels over here. T3 174.73, that comes in around that 38.2 level. And keep in mind, these are also, I put the lines here because they are price support as well as Fibonacci support. So those are high probability targets. If we start to get down here and we break this trend line, I think there's a good shot that T3 or T4 will be hit. As of now, T1 is that uptrend line. If you're looking for a very mild pullback, again, trade as you like. If you're a short side trader right now, trading a pullback, and you want to just game some quick pullbacks because we are in an uptrend, well, there's your shallow target. I do think we'll get down at least to this T2 level, 177.76. And likewise, if you're bullish and long and you want to keep buying the dips, these are all support levels that would provide an objective entry if and when we get there. However, if it's these divergences in place that tell me I'm personally not trying to get cute right now, gaming a pullback to T1. I wouldn't do so because of these divergences in place. I think if we get there, we'll probably get a reaction off there, but I think we'll see more downside again based on the posture of the charts right now. Okay, moving on to crude futures. This is a CL, crude futures 60-minute chart, symbol CL. Pointed this out in the trading room today. We had a divergent high put in today. We had a spike up in crude overnight into today, into the morning session, with followed by a very sharp reversal. Powerful, impulsive selling. You can see the negative divergence I highlighted here and showed you my two targets being 69.20 and 68.21, or 68.20, we'll call it, round off. And you can see, well, that was this morning. And here's the charts. You can see 68.20 was hit. As you can zoom in here a little bit, see it a little bit better. Oops, wrong chart. Let's go back to where we were. Okay, here's CL again, 60-minute chart. So we zoom in and you can see how that level has contained this pullback so far. This is a live chart. This futures is still trading. You can see here we hit a candle, and if we zoom in really tight, you can make out a green candle so far. So we reversed off that level after a very brief momentum-fueled overshoot. That's quite common. I usually cover, which I did, cover shorts before the actual support level. And in this case, I reversed that one, posted going long for a quick bounce. which is right here. Went long at 66, 69.16, and looking for a bounce. Originally, I had stated I was going to try to target up here around 69.82. I revised that. I'm just going to get a quick bounce. If you know, at this point, I raised my stops to break even, and I'm shooting for this level. So I have a sell limit order, a bracketed order. One cancels the other at 69.55. So you can see that level. The reason for that target, it's pretty well defined. And again, based on what I just showed you on the 60-minute chart, the longer term outlook, that was a pretty bearish price action today on the 60-minute chart. We'll get back to that in a second, but you can see a lot of reactions along this level. We could certainly bounce up to that higher target, but with the bigger picture, the near-term outlook now more bearish due to that reversal today, I'll be happy to just get a quick bounce out of that trade. And again, that was shared in the trading room for anyone in that. Just want to make sure that you saw my revised trading plan that I'm now targeting just below that level. Going back to that chart, there it is again, CL 60-minute chart, and you can see the impulsive. This is what I'm referring to as impulsive selling right here. You can see the big red candles. In fact, and you can see that that often comes at the top of an uptrend and kicks off a downtrend when you see that type of impulsive selling. And the fact it was coupled with a divergent high, negative divergence at this point, trend line break today. You can see I had two alternative trend lines I drew there. So check, 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 check all the boxes. And nothing is guaranteed in trading, but I still favor, as I showed you on that earlier chart, move down to at least there it is, 68.21 right about here. We'll see how the charts look if and when we get there. And for those of you that prefer ETNs to futures, the USO is one of many, one of the more liquid, more popular. What you can see today on the daily chart is a nice big bearish engulfing candlestick. This is a bearish engulfing candle. That means that big red negative, red candle down about 0.9% today. It engulfs the previous two candles. So that's called a bearish engulfing. We had a bearish engulfing candle right here, engulfed the previous two candles. We never got back above it. And that marked that top so far, and that is the top so far. Again, knock on wood, for 2018. We'll see if that holds. But there's another bearish engulfing, and you want to look for those after an extended uptrend. If they come during a downtrend, it doesn't mean that much, or right after, in the middle of something. So again, we've had a uptrend now since mid August, August 15th, a pretty persistent uptrend, and just like we had an uptrend leading into that one. So again, that further strengthens the case for more downside in USO in crude oil. Here's what it looks like on the 60-minute chart. You had USO close right around trend line support. You can see a 60-minute uptrend line here. You can see the negative divergence I've drawn out here. Just as we had bullish divergence here, those mark bottoms, and these negative divergences mark tops. This is a swing trader's time frame. You don't have to get a 10 or 20% move in crude like you're swing trading it for weeks or months. This is active trading. And if you get 3, 4, 5% in a week or two, or even a few days, move on to the next trade. It's what I call velocity. You're turning over your money quicker. I would rather make, a 3, 5% trade every week uh, fairly consistently than I would rather than make 20% on a trade that took 6 months to be in, because you're think of it as compounding interest, if you will. So not that you're going to continually or constantly make money trading actively. You can't always be in the market, but when you see these divergent highs and lows, they set up pretty good swing trading ops that again are commensurate to the time frame you're trading. This is a 60-minute chart. As such, these divergent highs and lows have produced trades that lasted on average, it looked like maybe a couple weeks on average, sometimes a little less, sometimes a little more. And so we may have the beginning of the next downtrend that could last a little while and certainly take us down here, maybe that 1395 area, and possibly a lot more, because again, the case was made that we may have a lasting top here on the daily time frame. Only time will tell, but I'm certainly open to that possibility. Okay, quick update on Euro USD. This is the Euro US dollar pair. Essentially, you're looking at a chart of the euro compared against the dollar. So when this chart is moving up, prices are going up. That's the euro rising against the dollar, or the dollar falling. So it's like looking at the dollar index in reverse. Not to spend too much time on this, a recent scenario laid out. We had a very, very well-defined support level here the white lines. We had a breakdown here. That was our what we call bear trap scenario, where we had a false breakdown. We recovered that level, bounced back up, ran right into resistance, and were rejected off that resistance level. And you can see now we pulled back to that support level again. So this is where today I became bullish on the euro once again after being bearish for a while and being bullish before that. Again, that was all laid out on the post today, the 60-minute chart. Back here, I posted this divergent low and bullish falling wedge breakout that kicked off this rally. Here, I started pointing out the divergent high, and then we had a breakdown, a back test of the trend line, and that set off this correction that we've been in. And of course, as I stated, that would be, give a headwind to gold, which it has. Gold and the mining stocks, when the euro's falling, the dollar's rallying. Remember, when the dollar rallies, gold goes down, and vice versa. So this means dollar up, euro down, dollar up, which is bearish for gold, bullish for gold, bearish for gold. But now we can see that target has been hit almost to the penny today. We came down to 1.15303, I think it was at the low today in reverse, so close enough for government work. Now we need to take out this downtrend line. You can see I added it's not very well defined. It's a potential downtrend line, but I'd like to see some follow through here on the euro. Even if it doesn't, it's not the end of the world. You can see there's plenty of room to extend these divergences. So if the euro US dollar wants to come back, make another test to that level, even burn some people. That's what the markets love to do, is see a well watched level and then come back in and take it out, shake out the longs that went in here, suck in some more shorts, and then reverse. All I'm trying to say is technically that can very much happen, and it wouldn't alter my scenario at all. It would only extend these divergences that we have in place right now. We don't have to do that scenario. We don't have to revisit or break these lows. If we do break them, I only want to see a slight undercut. Although I will say there's pretty decent support right here. You can see my levels on the chart. That's at about 114 or so. A lot of reactions there. That's probably, let's just say, my threshold, if you will. I really don't want to see the euro US dollar go much below that level. And if it does, I want to see it get back up there quick. Otherwise, if we continue to rise from here, all the better, all the more bullish for the euro, bearish for the dollar, bullish for gold. If we can pop above this level, pop above that 116, 196, that was my first or minimum pullback target, if you recall. That's still, and it certainly was a level worth noting. You can see it was laid out in advance. We popped down below it, but then we back tested it. Support once broken becomes resistance. And you can see that was resistance right there once we took it out. So now we need to take that level out. That would be bullish because that would be a break above resistance and really, I think, seal the deal for, or at least really strengthen the case for a major top in the dollar, bottom in the euro. And again, that would be bullish for gold. So we're not even going to look at the chart of gold today. I don't care what the chart of gold looks like. I will trade the dollar, and you will get the trade on gold right, even if there's a temporary disconnect between the two. Gold will follow the dollar inversely. That is, I've laid that chart out many times in the past, going back 10 years or more, showing the unmistakable correlation between gold, especially GLD, guys. Keep in mind, if you're listening to this video and you're in Japan, Europe, China, somewhere else, and you're buying gold based in your local currencies, there's another story. But GLD, the ETF, is priced in US dollars. So that's it's as simple as that. When the dollar goes up, it buys fewer shares, more shares of gold. And when the dollar goes down, no, I said that wrong. Yeah, the dollar goes down. Yeah, I got it right. Goes up, buys more shares, more ounces of gold. And when it goes down, it buys fewer ounces. So therefore, gold is more expensive when you can buy fewer ounces with the same amount of dollars. It makes gold more expensive in US dollars. All right, let's move on. Quick look at the UUP is a dollar ETF, or ETN, I should say. Technically, it's an exchange traded note, not an exchange traded fund. There you had a very well-defined downtrend line, bullish falling wedge, divergent low, everything you like to see, breakout. And that launched the rally right here. That rally ran smack into resistance, a lot of reactions back here, 25.71, stopped cold. And then at the time, it was set up in a bearish rising wedge, broke down, so far came for a near back test. And again, you can see the negative divergence, maybe a little more upside in the dollar, maybe not. but I do favor more downside. I think a major top, at least an intermediate term top, has been put in the dollar. And if this does play out as such, that would be bullish for gold. So that's why we don't even need to bother with the charts of gold today. We'll see how that plays out. Let's a couple more things and we'll wrap it up here. Let's look at sugar and SRS, or the REITs. Okay, this is a 60-minute chart of sugar futures. That's U.S. sugar number 11. The symbol is SB if you trade futures. If not, we'll go to look at the official trade. The official proxy is CANE, one of two, at least two sugar ETNs out there. But I watch the futures because that shows you the real picture. You know, they're going to trade. And keep in mind, these don't trade regular 9:30 to 4 o'clock trading hours. They trade off staggered hours. But you can see that we broke out. We had a downtrend line here on a 60-minute chart, as well as this level I was highlighting, 1043. I highlighted that recently. We broke out, back tested the downtrend line, and have been moving higher since. And we also took out that 1043 level. So far, so good. And keep in mind that also came with a divergent low in place. So now let's look at sugar, the ETN. There's a couple of them. There's actually a few out there. That's one that was retired, SSGB. I believe that one was retired. We have SGGFF. That's the old SGG for those of you who traded for a while. That one looks like it's broken above its downtrend line, falling wedge, divergent low, everything you like to see. And this time around, I decided to go with Kane as the official proxy for this trade in sugar. A lot more investors and retail traders out there have access to ETNs and they do futures. Plus, you don't have the leverage factor that futures do. So here's Kane. You can see that we just barely avoided having our stop run. That's been a signature of the market lately, running well-placed stops and then having the trades go on to play out exactly as the charts had indicated they would. But with that being said, so far so good here. We're not out of the woods yet, but you can see we did today. We were up not a lot, 0.15, but we're inching above this downtrend line, so that's good. All in all, the case for a bottom is firming up. You can see the bullish divergence is in place. Again, I've made a case. I've looked at long-term support levels on sugar going back for years that have so far being held. And I think there's a lot of potential if we can put a bottom in here. The more we move up, if we can get up here to this first target and eventually take that out, that target's at 737, but the actual resistance level is a little above that. I have it at 738. Keep in mind, guys, I sometimes modify or adjust the targets on these ETNs based on what I see on the futures. The futures are really what's trading. That's where the big boys are trading for the most part. Sugar, they're using sugar future contracts instead of these ETNs. So if I need to adjust the targets, I will. But as of now, we'll just sit tight with these. And again, it looks good. It's a commodity, and what I like about it, if nothing else, is it gives you diversity in your portfolio, away from equities, away from other asset classes, bonds, and everything else, and it helps you, have a more well-rounded portfolio. And there's about a 29% gain potential if we get up there to that third target. So, again, so far so good. All right, this is SRS, the ultra short real estate ETF, two-time leverage, and you can see bullish falling wedge, just starting to try to pop its head above there, but not impulsive yet. So for all intents and purposes, I consider this a close really on resistance. It didn't close enough above that level to really call that a breakout. That's not impulsive. I don't see impulsive volume, but it is there. It's poised to break out. This could happen any day now. We can have another rejection off that level, maybe thrust that down within the wedge, or we could break out tomorrow. So I still like this one, and still, plenty of upside left. If we do break out, and about 6% to the first target, 13% to the second target, and if the charts continue to firm up, and we'll probably extend it out here to third target around that level, $32 or so, and that'd be about a 19% gain. So that's SRS. And as always, when trading the leverage or inverse ETFs, I like to look at the non-leverage one time that tracks the index, and that's IYR. And you can see the same story. It's a mirrored chart in reverse. This is just a bearish rising wedge. So we need to see IYR take out this trend line with conviction. And if so, that should help the SRS trade. All right, let's wrap it up here. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.